Well, we are pleased to see this preliminary NAFTA agreement come together. From a Canadian perspective, what's most important is certainty in the investment climate. And so one of the key provisions of the new agreement is an extension. This is a 16-year agreement with a 6-year review. So all of the risks around the original asked for sunset clause that had risks that after 5 years any party could walk away has been removed. So we have some certainty of time. The other thing that we have is that the auto rules of origin have all been settled, and with the new content provisions, which are moving up from 62.5% to 70% has to be originated in North America, that actually is quite beneficial to our Canadian auto part suppliers, especially since they're largely integrated Canada, US, and Mexico. Not only are those numbers changing, but how they're going to measure and track rules of origin are tightening up. So that's also a positive. With respect to dairy, at the end of the day, the opening of the dairy market is consistent with the agreements that Canada has already signed with the pending TPP and the CETA, which is the European deal. This is something that's going to be very livable for our Canadian dairy industry. One of the big sticking points was that outside of NAFTA, the U.S. has started to use something they call Section 232, which is national security risks, to put tariffs in place kind of across the board on various industries. And we were very concerned with the threat on auto. We got an agreement that auto tariffs will not apply to Canada or Mexico unless our production exports of autos into the U.S. exceed 2.6 million cars. Currently, we're producing at 1.8. So that's like over a 40% room for growth. That gives us a lot of runway. One of the provisions that we didn't get out of the new NAFTA agreement, though, was for the recently imposed Section 232 tariffs on steel and aluminum, the 25% and 10% tariffs, to be lifted. Those are still in place, and the parties have agreed to do an ongoing negotiation. The Mexican government is changing on December 1st with AMLO, the new president-elect, coming in. He has indicated that he is supportive of the transaction that has been signed, the agreement. It's going to be signed by the outgoing Mexican president, but he has indicated, AMLO has indicated, that if it is not delivered when he comes in, that will be a restart of negotiations, which is something that certainly the U.S. Is not looking to happen. So we're very comfortable that the terms of the new trade agreement that were announced overnight are going to be the rules that we're going to be living with. They give us a much more certainty going forward. They give us new auto rules, which are very favorable to us, and they eliminate the risk of really severe Section 232 tariffs. We now expect that the Bank of Canada is going to have the ability to proceed with moving on rates. We've had a slower pace of rate increase than we had been expecting a year ago because of the trade uncertainty. And we've certainly seen that the Canadian dollar has been weak through this negotiating period. So from here, we do expect that the CAD is going to retrace some of that. We've already seen it move approximately 2%. Since last week. We think it still has some more room to go, and especially as this will now allow the Bank of Canada to start raising rates, that's also going to be quite positive to our dollar. So as far as what industries are we thinking that this is going to benefit, I mean, obviously the auto suppliers, because they have been pricing in some risk of tariffs. But we also see that across the board, it's going to be positive for the Canadian economy, especially like our manufacturers and industrial complex. It's going to be positive for the rails, for instance, because it protects the general level of trade between the two countries. It's also quite positive to our financial services. You can think of the Canadian banks as really being reflectors of the core Canadian economy. It's going to increase the certainty around our CapEx decisions for corporations, and so their ability to invest in Canada, the amount of loans and financial services that they will be using will all benefit from having this certainty. So we're actually quite pleased with where this leaves us today.